Now to our weekly market monitor, who has names of some ETFs that address two investment themes: technology and geopolitical disruptions. Greg Luken is the founder and CEO of his own firm, Luken Investment Analytics. Greg, good to see you again. Welcome back.
Hey, good to see you.
Let's start with technology. You have an ETF that you say diversifies beyond the FANG stocks. Is that the idea?
That's exactly the idea. You know, most technology funds have benefited largely from 4 or 5 names that have lifted them, whereas FXL has exposure to about 90 names and gives more even exposure across the board. In fact, the top 10 holdings only comprise less than 22% of the fund.
Next on the list, we're going international. It is a diversified markets ETF, emerging markets specifically. The symbol is SPEM.
Yeah, so this gives an investor broad exposure to emerging markets across the world. Emerging markets didn't do well last year. They've underperformed U.S. markets this year. And those economies in aggregate are actually growing at a higher rate than the U.S. economy.
And the third one is another ETF that invests outside the United States. But, you know, this theme of trying to weather global disruptions, how would that help with that?
Well, good question, Tyler. I appreciate that. We believe that the global disruptions, so much of them are already baked into the price of these equities. So this owns companies like Unilever and Nestle. And so if you eat Haagen-Dazs or Ben & Jerry's ice cream or drink Carnation instant milk, you're using the companies that are in this. Those companies have not performed well. And the geopolitical stresses, the tariff threats are already baked into those prices.
How do you feel about the market overall at this point, Greg? I mean, we've got a lot of headline risk lately. Are you overall bullish on the market, despite you're giving us some hedges against volatility and the like?
Well, we are still very bullish on the market, and there was really interesting price movement this week with gold, which can be a warning sign. So we're cautious, but we still see in the service sector the numbers there are still good. Manufacturing is slowing down, obviously, as a result of what's going on with tariffs as companies adjust to the disruption that's going on. Right. And so overall, we think it's still healthy. Right. The growth in manufacturing has slowed.
Greg Luken with Luken Investment Analytics. Good to see you again. Thanks for joining us tonight.